All right, welcome folks to the video. Anthony Special here with Hawkeye Traders. We're going to be doing a case study today on an actual trade that we took inside my big energy profit service utilizing the Hawkeye volume-based tools. So let's jump into it. I'm going to break it down with you. I'm going to show you and walk you through some of the analysis techniques I use. But really, most importantly, what's kept me in this trade is volume. And for that, if this turns into a monster, we've already returned over 200% on the call option itself. But if this continues to perform as expected, volume is really what I can attribute staying in this trade, right? That's the reason I said, hey, listen, it's not time to take it all off quite yet, because if the volume analysis holds true in conjunction with the price action, there's a pretty good chance that we could continue higher. So let's talk about it. I'm going to zoom in a little bit, just kind of show you guys where we took a decision to enter. Right down here around 103.75 was the buy up to entry. Our stop was placed down here at 100, so we were risking less than 4%. Okay, I'm a big fan of taking little risks with big upside probability. That's how I trade. That's how I trade intraday. That's how I swing trade. That's how I position trade. If I'm wrong, I want to get out as quick as possible with the least amount of damage to my account. But if I'm right, I'm going to pay and protect myself along the way. So we create this consolidative base above this channel structure here. And guys, I mean, we literally march into target 1 at 109, target 2 at 112, and target 3 up there at 118. Just beautiful, right? Now, here is the important part. I want you to watch how price has now pulled back into an important channel structure. Okay, so I want you to just keep a really close eye on this. All right, just notice this. This is what I'm looking at. This is a higher time frame channel structure right here. Notice this singular candle. Increased selling volume, failure to break support. And by break, I mean trade below, close below, continue to close below, okay? On 2 occasions, 3 occasions, 4, 5 occasions, we've tested this upward channel top, right? But notice, even with the selling volume present on the majority of these tests, we didn't settle below it. And now, what are we doing? In fact, on selling volume, we placed the low, and we're now starting to push back through to where? Well, my expectation would be we probably come back up towards 121 and then potentially revisit the high at 123. And then my big energy profits clients know exactly what to do above and beyond that. Why? Because when you have a winner on, you just let it keep paying you. Right? We took profit 3 times. The first time we took profit, we moved our stop to break even. All the risk was gone. As we approached target number 3, our call option was up over 200%. And life is good. But what's most important is what's keeping me in the trade. I pull back to support. Notable selling volume. That tells me the sellers are getting all absorbed up here. The buyers are denying them from going lower, even though they're attempting to. And the reversal candle prints on red selling volume, and the market has respected this candle ever since, okay? Because I understood how to interpret volume and price action at support, it allowed me to say, all right, you know what? It's not just time to kill this trade. I think we should hang on a little bit. Why? Because there's a good chance that we may still push higher. And if you notice, this pullback trend line, we broke and settled above it this past trading session. That's a really strong sign. And again, if we continue, we'll retest the formation of that trend line. and push above and beyond that to the profit targets that we have laid out. Guys, it's all about understanding volume, price action, market context. If you can put those three pieces together, as you can see, listen, I'll take the drawings off my chart. What's left? Hawkeye volume and the price action. That's it. That's all you need. Everything else that you put on your chart outside of volume and price action is a lagging indicator, right? Those indicators only print after price action and volume have printed. But if you can interpret the relationship between volume and price action, that is the only leading indicator, meaning it's likely to tell you what could transpire next. Testing support with selling volume present with a candle that looks like this, that was unable to close below support, tells me the sellers are getting absorbed here and the buyers are regaining control. And you can see, as the buyers have stepped in, we've continued to push higher. Do I know how high this trade's going to go? No, nobody does. Okay, that's a fact that you just simply have to understand. Trading is a business of probabilities. The only way that you're going to be successful is having an edge. That edge is your probability of being successful, right? Understanding volume, price action, and market context is the edge that you must have. If you want to employ other indicators or software, whatever else you want to dance across your screen, that's fine. But if it's not built around aiding you in your interpretation of volume and price action, then unfortunately, it's probably just consuming space. I don't mean that disrespectfully. I have utilized every indicator in existence, every software in existence. I only endorse softwares that are driven off of volume and price action. Because if they're not, it doesn't mean anything. Because that is what the market is driven off of, volume and price action. So while everybody's trying to sell you something that's going to help you get rich quick, which you're not going to, because market conditions change, market context changes. And the only way you're going to be able to have the foresight to that change is by understanding volume and price action. So guys, with that being said, I want to encourage you to venture into the links below this video. I'd like you to consume the content. I'd like you to reach out to myself or my Hawkeye concierge team. Ask questions. Let us help you advancing your trading journey. It doesn't matter if you're brand new or if you've been doing this for 10 plus years. The reality is, I don't care where you are in your career. If your trade plan and your edge is not volume, price action, market context forward, along with great risk management, you are not going to be a sustainable trader. You may have a few one-hit wonders, right? But you'll end up giving it all back because you don't understand the underlying movements of the market. And when you do, you look at everything differently. So even if you just want to add that component, that missing piece to whatever it is you're already doing, that's fine, right? You may realize eventually all I need is volume and price action because ultimately it tells the entire story. All right, guys, I appreciate each and every one of you. I hope you enjoyed this video. If you'd like to learn more about Hawkeye volume, if you'd even like to learn more about big energy profits, there's links below this video. I encourage you again, click on them, consume the content, reach out to myself and my team. We will answer whatever questions you have. And if we are fit to help you along your trading journey, so be it. All right? I appreciate you guys. I will see you in the next video. God bless and have a beautiful day.